Right, you see Meta stock rallying up over the past few months and must be thinking whether I'm too late to get in. Well, I was thinking the exact same thing until I took a deeper dive into this company. And I found three findings which is going to help your decision so much easier on whether to buy or sell Meta. Now, the three findings include growth, strategy, and financial dominance, which happens to be the format of this video. In late 2021 and early 2022, Meta had crashed almost 70% at the bottom of October 2022. Since then, the year has rallied up over 82%, which is just phenomenal. And I believe this stock can keep going. Now, if you didn't know already, Meta has its fingers in a lot of pies. It owns Facebook, WhatsApp, Instagram, and even Oculus. These are huge growth drivers behind this business, and we're going to break down each segment, what it provides in terms of the growth, strategy, and also the financial dominance. But first, if you're new to my channel, my name is Sam, and I cover all sorts of different stocks on this channel. If you enjoy this kind of content, make sure to drop a like, subscribe if you haven't already, to keep up with all different stocks that I'm looking into. Jumping right in now, first is growth. So in the growth, I look for underutilized companies which have huge potential to be monetized in the future. And I think WhatsApp is a perfect example where revenue can increase massively and drive greater profits for Meta. So we take a look at the different annual revenue. From 2018, that revenue stood at around 443 million. And since then, from 2018 to 2022, it's over doubled its amount of revenue. It's gone up all the way to 906 million. And I think this can still improve with the amount of monetization in terms of what WhatsApp can deliver. Then if we take a look at the user growth is absolutely huge. From 2012 to 2022, we can see that the quarterly numbers has gone from just over zero all the way up to 2.2, 2.4 billion users, which is just phenomenal. So as soon as you start to monetize that, this is going to be fantastic for growth for Meta. When you break down by country, you can see that India has a huge amount of users at 390 million, with second to be Brazil. You can actually see the US is actually fourth on the list at 98 million. So there's still huge potential to gain huge market share in lots of other areas in terms of the world. So with this being the case, we're going to expect this to increase as time goes on, and that monetization is going to be a huge factor in driving WhatsApp's growth and Meta's growth too. I personally see that what Meta needs to be doing is making these platforms more profitable, increasing that capacity, increasing their current platforms rather than using any mergers and acquisition deals. They need to make sure that they are increasing and improving the platforms that they currently have to create better monetization methods for that better growth and profitability. And the next factor we're going to be talking about is Instagram, particularly the reels behind Instagram and how it compares to TikTok. So back in 2022, I think a large part of Meta's decline also included on the reels and the TikTok section, which I think was definitely underappreciated at the time because I think it really did weigh in on their particular platform. However, in 2023, this has been much better. Meta has been reeling in revenue and helped narrow in on TikTok, boosting that AI, helping that algorithm determine who and what content they need to show to each individual. This has not only just helped in terms of user growth and revenue growth, but we're also seeing video plays increase on Facebook and Instagram, which are now topping 200 billion per day. And this is up from 140 billion last fall, and TikTok didn't release numbers, so we don't quite know how this compares to TikTok. But the growth of Reels is massive, and again, you have that opportunity to further monetize Reels, which is very underutilized currently. Now, to gauge a better understanding of Meta's revenue, how they're driving it, we have the segment results which help with this. We can see the advertising on the left here, other family and apps revenue, and that Reality Labs revenue. This just helps provide a better breakdown of how Meta are driving their total revenue. So we can see that in 21 Q2, this is at 29 billion. And since then, it's gone all the way up to 32 billion, basically in Q2 23. Now, while this is a very incremental increase in the last 2 years, there's been some very different macroeconomic environment factors, which has definitely played a part in this. Not only this is also down to operating margin as well. We can see that the operating margin was 43% in Q2 21, and this has weighed in on the performance over the last year, as we can see. It's been declining all the way back to 20% in Q3 22, and if you notice, since then, it started to improve, and we've seen operating margins get up to 29% in Q2 23. And this has definitely helped with the performance of Meta as of recent. They're becoming more profitable once again. And this is mainly driven through that Reality Labs operating loss. It's definitely narrowed, which has definitely helped the business in total. Using other growth metrics now, such as the family daily active people, we can see the growth has been from 2.76 billion all the way up to 3.07 billion in Q2 23. The growth just continues to increase. And then if we look further down at the monthly active people, this has been a very similar situation. It's continued up from 3.51 all the way up to 3.88, showing that people are still using these platforms and they're still growing. And this is helping Meta increase that in the future too. Now, the last thing to point out in the growth section is the free cash flow generation that Meta actually produces. Back in Q2 2021, this was at 8.5 billion in free cash flow, and we've seen that get to a high of 12 billion in Q4 21. Similar to a lot of the other metrics, we've seen that decline over the last kind of year and a half, which has led to that stock performance also decline. But now we're starting to see it get back up to the high levels that it was once doing in Q4 2021. In Q2 23, it's obviously almost back up to 11 billion now, and I can expect that to increase in the future as Meta gets a better hold of improving the current platforms that they have, which can help monetize and improve their cash flow generation. Let's talk about my second finding now, and that's strategy. Okay, so strategy is a really important factor in how this business can transform itself from a $1 trillion business to a multi-trillion dollar business. We need to understand where this monetization can come, whether it's the current platforms which can improve, and also the vision of Mark Zuckerberg, where he wants to take this business, and if he still thinks the metaverse is going to be a huge growth driver in transforming this business. So let's get into it. So first, let's talk about metaverse and the technologies behind it, which is helping impact in the real world. Now, this is something that Meta are definitely pushing very hard. It's definitely becoming a huge opportunity. Since then, we've seen huge takeaways in the virtual mix and augmented reality, which is reaching new levels in particularly the surgeon and athletic industries. They're helping increase this immersive technology in these fields, providing real value. Not only this, they've been providing different examples of how people are using this immersive technology and transforming that education and training, which can help people stay more connected. Now, it's definitely something that Meta is pushing hard, whether it's through surgeons, whether it's through athletics, or whether it's through different hands-on experience with welders, aviation companies. There is huge use cases in the metaverse. This will take time to scale, but this is definitely a huge factor in what Mark Zuckerberg is trying to push. It's no secret that the pricing behind Meta and the Quest 3 has been a big factor in determining the actual performance of Meta as well. However, they're looking to lower prices, particularly for the Quest 2, which makes it more immersive and more accessible to lots of different people that might not have had the previous amount of money wanting to spend that on something so speculative. However, this is definitely improving, and we're seeing more real immersive ways and use cases for their technology. It's extremely interesting, and it's something that I think everyone needs to look into. There's so many different places and use cases of this technology. We just need to actually dive in deeper to this. Okay, now let's dive into the outlook of the company for Meta, what exactly they're guiding and exactly how they're going to drive the strategic development coming into the future. So looking at the CFO outlook now, we're expecting the third quarter of 2023 total revenue to be in the range of that $32 to $34 billion mark. Not only this is assuming a 3% year-over-year growth revenue, which isn't exactly what we want to see. However, we will hopefully drive this with the investment that Meta are actually plowing into this company. Now, the second thing is going to be about the few factors to be the drivers of the total expense growth. While we're expected to see this range in the 88 to 91 billion, increasing from their estimated 86 to 90 billion, they obviously want to dive in deeper, increase these costs to actually drive future growth potential. And their most compelling opportunities is going to be around that artificial intelligence and the metaverse, which they want to go all in on still. Now, looking further down, we can see the main thing I noticed was going to be around this reality labs, especially around the expected operating losses that are going to increase meaningful year over year due to their ongoing product development in augmented reality and VR headsets. So they want to scale out this ecosystem further because they do really believe in it. So we can see they are wanting to go all in on these particular parts, which could be a bit of a red flag if you're not fully into the actual reality labs, AR, VR world. So I think the strategic vision for Meta is very clear. They want to go down this metaverse route as they strongly believe this is still going to be the best way for future growth. Obviously, they'll have their existing platforms such as WhatsApp, such as Facebook, Instagram, Oculus. All these different sections are going to help almost fund the metaverse. And they can increase that through monetization, increasing the platform, making it more sticky in terms of the actual features that they have on all these platforms. Obviously, some of them are still very undercapitalized and under monetized, such as your WhatsApps, such as even Instagram still. I believe there's still great scalability within these businesses, which can drive that strategic vision. However, it could come at a cost currently, as they're obviously plowing in huge amounts of capital to try and fund this metaverse, build it out so that there are more use cases at the end of the day. So the third finding is going to be that financial dominance. Okay, so let's break down the balance sheet of Meta, and I've highlighted all the important points that I think you guys need to understand. So first, it's going to be around that total cash and short-term investment position. We can see it's absolutely massive and it's been growing huge. It went from 41 billion in 2018 all the way up to 61 billion at the height of 2020. Now, we've seen more investment into Meta, which has helped with their growth, of course, but it's still been able to expand from 47.40 back up to 453 billion in the last 12 months now. So the second thing is going to be around the total assets. The total assets is 206 billion. And if we compare that to the total liabilities, we can see that's only at 72 billion. So when you consider the total asset ratio to total liability ratio, it's almost 3-1 in terms of total assets to total liabilities, proving that this business is in a fantastic position in terms of being able to pay off that debt very easily. And that's the third point which I want to consider, which is going to be around that total long-term debt we can see here. It's only at 18 billion in the last 12 months. And when you have a cash position of 53 billion, it's very clear that they can pay off that debt very quickly. Now, the next thing is going to be about the total equity. So as a shareholder, you want to see the total equity increase over time. And that's exactly what's been happening. We can see that as a shareholder, our total equity is improving and the business value is improving too. It's gone from 84 billion all the way up to 134 billion, and it's been very steady as we can see. Now, the next thing is buybacks. Meta is buying back shares like crazy right now, which is just what we want to see. The total outstanding shares has gone from 2.8 billion all the way to 2.5, just over 2.5 billion. So we're getting greater value from this company, which is building out that pie particularly. And the final thing to consider on the balance sheet is going to be that net debt. You can see that it's actually negative because we have so much cash that we actually have a greater net debt position, in meaning that we have more cash than liabilities on hand. Okay, let's see now how this is going to work in terms of a valuation perspective for Meta. I've got three cases here. I've got a normal case, a best case, and then a worst case scenario. And we're going to be basing this off the cash flow of 2023 all the way up to 2034. So on the right-hand side here, I have the different growth rates of the different cases which I just laid out. So for the normal case, I'm expecting an 8% growth within the next 5 years, and then that decreasing as it goes 5%, which as the company gets bigger and bigger, it gets harder to grow. Now, the next thing is around that discount rate at 10%, which is roughly what the S&P has returned over the last 40 to 50 years. So we want to have some sort of margin of safety when we're buying a company like Meta. Now, with a terminal multiple of 16, I think this would be a very fair multiple, as in 10 years, once a business gets bigger, you can't have such an inflated multiple. So we can see here that this spits out a $449 range, which is obviously much higher than what the company is at right now. So if we then take a look at the best case, you can see that it gets even better. I'm assuming a 50% growth rate in the next 5 years, a 10% growth rate from 5 to 10, and then a terminal multiple of 18. As it's potentially are going to have a better moat. If the business is better in the future, it could potentially warrant a higher multiple. And we also don't know the growth figures in the next 10 years. So we want to be as conservative as possible. But in our best case scenario, I've still gone for an 18. And we can see this actually spits out a $733 range, meaning that if you bought the company at $733 today and it produced this growth rate, you could still expect a greater return of 10% or less. Now, not only this, if we look at our third case scenario, the worst case now. So again, the cash flow is still going to be that 24 billion. That stays consistent throughout the three different valuations, but obviously the growth rate is going to be much lower. I'm assuming a 3% growth rate in the next 5 years, which is very low, and then only 1% from 5 to 10 years with the same discount rate, but an actual lower terminal multiple. So I've got this at a 9, assuming that because this is extremely low and it's very unlikely that it's going to be at 9, but we can see it's still at $257. Now, currently this current stock price is around that $300 range. So in this case, you would actually struggle to make money. However, if you increase that terminal multiple, let's just put it at 12, you can see it gets to almost where we would be expecting right now. We can see that if we then increase it to 14, we're basically where we are today right now. So assuming those growth rates, you can see how it works from a worst case scenario all the way to the best case scenario. And then if we take a look at the scenarios here, we have 3 scenarios and I've provided a probability to each of these 3. So we have the worst case being the most likely, we have the normal case being the middle likely, and then obviously the best case being that 1 out of 10 range, which is 0.1% I've given to it. And this gives a sum of around the $393 mark, which would be an intrinsic value for Meta. Now, if you wanted to have a margin of safety, the margin of safety right now would be around 25%. However, if you wanted to increase and play around with these growth rates, it may change depending on your particular values that you provide to it. Now, what I'll do is I'll provide you with this calculator so you guys can play around with it in your own time and work out what you guys have in terms of the growth rates. But yeah, this is the calculator formula. Hopefully this gives you guys a bit of an understanding of my intrinsic value and how I value Meta. Okay, final summary now. Okay, to be frank with you, this is a buy still. You guys can still make fantastic money in Meta, in my opinion. From an intrinsic calculator and formula, we're already seeing that this business can still produce great share returns for you. If we're assuming those growth rates, and I believe some of them are very conservative, you can still make some fantastic money in this. Not only this, I think the growth drivers is going to obviously be around the under-monetized platforms such as WhatsApp. Even Facebook and Instagram are still under-monetized. I think we're going to expect to see more profits from these companies as that ad revenue ramps up, and we're going to see this company even more profitable than before. Now, obviously, we are seeing huge amounts of investment in that strategic vision of the metaverse, which could weigh in on certain performance elements, especially the profitability, as they try and scale and increase these infrastructure costs to drive the metaverse and that vision forward. It could hurt the business just slightly. However, even considering the costs they're going to input into Reality Labs and the metaverse, this business can still perform very well. I think the free cash flow generation on this business is just getting started. Now, not only this, if we consider the financial dominance of this business, obviously a very big powerhouse, lots of cash on hand, no debt, shares absolutely coming down. And then, of course, we just have the actual business itself being an absolute killer in the space. Now, if you guys enjoyed this video, make sure to drop a like, subscribe if you haven't already, and I'll see you guys in the next one. Thanks for watching.